Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Tuesday, December 23rd, London time, and this is your Daily Market Brief. As Europe wakes up, investors are focused on a key U.S. growth update later today, a firmer Japanese yen on intervention warnings, and gold pushing to fresh records, even as oil slips on supply headlines. Let's start with the global macro picture. The first estimate of U.S. third-quarter economic growth lands at 13:30 GMT, with analysts looking for steady expansion after a strong prior quarter. Into the holidays, that release is likely to set the tone for the dollar and broader risk appetite. In Asia, equities mostly climbed overnight, with investors leaning into artificial intelligence-related names, while Singapore's inflation stayed steady and slightly below expectations, a reminder that price pressures continue to cool in parts of the region. Meanwhile, in Japan, the yen is firmer as officials dial up intervention warnings, and Prime Minister Sanae Takaichi underscored that the national debt remains high while rejecting irresponsible bond issuance. That combination has seen some pairs pull back, with pound-yen easing from multi-year highs. The euro-pound cross is softer after UK growth matched forecasts, and the Australian dollar is finding support after the central bank's December minutes and ahead of that US growth print. Turning to commodities, gold has extended its rally to a record high, buoyed by safe haven demand amid geopolitical tension and economic uncertainty, a move echoed by higher local prices in India. Oil is lower, with U.S. crude slipping back below the $58 mark after the U.S. signaled it may sell seized Venezuelan barrels, adding a potential supply overhang. For traders, that matters because cheaper energy eases near-term inflation pressures and can support consumer-linked sentiment. On currencies more broadly, the dollar tone is mixed into the data. Euro-dollar is pushing toward two-month highs. The Swiss franc is firmer, with dollar franc under pressure ahead of a sentiment survey. And in emerging markets, the Indian rupee remains fragile as prior central bank support fades and importers step in to buy dollars. It's a reminder that policy divergence and balance of payments dynamics still drive the edges of the FX complex. Looking ahead, the calendar centers on that U.S. growth release, with a Swiss expectations survey also due. Beyond that, it's a quieter run-up to the holidays, so liquidity could thin and amplify moves around headlines. For today's watch list, I'll be watching euro against the US dollar for a continued uptrend if US growth comes in steady but fails to lift yields meaningfully. I'll keep a close eye on dollar-yen for a down bias as intervention chatter lingers and Japanese officials stay vocal. The Australian dollar versus the US dollar looks constructive on the RBA tone and softer dollar backdrop. In commodities, West Texas Intermediate has a downside tilt if supply headlines build, while gold's uptrend remains intact as safe haven demand persists. And in Asia, dollar rupee bears watching for renewed upside as the impact of India's recent interventions fades. The takeaway, in short, markets are cautiously optimistic into year-end, but the balance between resilient growth and safe haven demand says sentiment is still tidy and fragile around the edges. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.